नमस्कार फिर पैसा बोलता है में फिर से आपका स्वागत है मैं आनंद श्रीनिवासन Today I want to talk about three categories of assets which basically Warren discussed. I also want to give you a small twist between what Warren says and what I disagree with him, especially for the middle class and the upper middle class in India. For the rich, I have absolutely no disagreement with Warren. And I will also tell you why I disagree. So, what Warren says is there are three categories of investments. One is you lend money to somebody and he gives you back an interest, and on a fixed day, you can also get the principal back. And it depends on the credit risk you are willing to take. The amount of money you get, that is interest, will differ. So there are bonds, there are bank deposits, there are savings bank deposits, there are current account deposits, and there are private credits. And you can make loans against properties and so on. Basically, all this various categories where you lend your money and you get interest over a period of time. Savings bank gives you the lowest because you can take the amount at a day's notice, not even a day's notice. At a minute's notice, you can withdraw money. So that pays the lowest interest. And government bonds pay slightly more than that. That is because the government will never, the assumption is the government will never default. The government will not default anyway because the government can simply print more money and give it to you and you will take it. The third is of course high-end corporate bonds which are highly rated, which you will get slightly a small premium above the government bond, but nothing too much. Then there are companies which are not so well known in public and which and their businesses are growing, and there they will have to pay a higher premium. Then there are junk bonds in the United States which command a huge margin because you are taking a big risk. The second category is you neither get interest nor does the asset generate any cash flow. Bond does not generate cash flow, it only generates interest. So cash flow is basically profits. So basically in the second category, you buy an asset hoping that over a period of some time, the value of the currency will drop and somebody will buy it back from you at a higher price. The classic example in this is gold. You just buy gold from the shop and keep it in your locker and wait for the price of the currency to decline, and then you will go and sell back the gold at a higher price. Keynes called gold a barbaric relic, and Warren is completely against investing in gold. But I have a different viewpoint, especially for the middle class and the upper middle class in my country of origin, that is India. I'll explain to you why. Third is, of course, you can keep cash. Cash will depreciate in value. Nobody will give you interest. You can keep it in your house and take it out anytime. The third category is a category in which if you invest, you will get cash flow out of it. And the cash flow will continue to increase or decrease depending on the price of depending on the economic conditions. There are two types you can do this. One is, of course, you can have a property and you can have rental, and rentals keep increasing over a period of time. But a rental is like a bond. The money you invested is the capital, the rent you get is interest. But the only difference between the bond is if the market gets heated up, the real estate value also goes up. In bonds, for bonds to go up, interest rates have to fall. If interest rates fall substantially, the value of your bond goes up. If the interest rate rises, the value of your bond falls. But if interest rate rises, the value of your real estate will also fall and your house prices will come down. These are the different classes of investments. So I prefer basically bond, and I also prefer equity. I don't prefer real estate in India because it's very expensive and the yield is very poor, which is 1 or 2%, whereas you can safely make 9% in a decent bond. Why do I recommend gold to my middle class friends and also the upper middle class friends? Is because in a country like India, getting credit is very difficult. Access to credit is much more easier in the developed markets, and there is, of course, the government has a huge safety net. In India, access to hard assets is extremely difficult. Land is very expensive. 90% of India cannot afford to buy land. Most of India is uneducated and will not have access to stock markets, and neither will have the knowledge of which stock to buy and which stock not to buy, and so will not invest in markets. For the size of India, the amount of people who invest is very insignificant. In case of bank deposits, The problem is very simple. The rate at which banks give money for FD and savings bank is less than that of inflation, and the government puts a presumptive tax of 10% on it, assuming that you are liable to pay tax, irrespective of whether you actually have to pay tax or you do not have to pay tax. And by the time you get the refund, it's about 18 months, and money would have lost its value. If you had bought a basket of goods 5 years back and compare the price of the baskets, what was it 5 years ago and what it is today, and you had put the money in the same in a fixed deposit, you will find that you cannot afford to buy the same basket of goods. This is why I do not recommend fixed deposits. Now, coming to the point why I decide to buy gold is very simple. In India, access to credit is unquestioned when you have gold. If you have gold, you can go to the nearby pawn shop, you can go to the non-banking finance company, you can go to a small bank, you can go to a public sector bank, you can go to a large private sector bank. Nobody asks you proof of income. There is no processing required. You'll have to wait for half an hour, and we give you a PAN card and a bank account, money will be deposited. The pawn shop will give you cash. In the other case also, they were giving cash, but now it is where my government rules mandate that you have to take the PAN card and put it in the bank account. Therefore, money is credited in the bank account. If you are doing to a cooperative bank, you can immediately withdraw the cash and go. What I am trying to tell you is this very clearly: in a times of emergency, access to credit for the middle class and upper middle class can occur only through gold. Even credit card, you cannot swipe it in your name and take for cash. So though it is very prevalent and a lot of people do it, RBI prohibits you. If you get caught, you will have severe repercussions. For the poor and the upper middle class and the upper middle class, gold gives you an access to credit. We are not in the same class of investors as Buffett. Buffett does not need money. He has $150 billion in the bank. The average Indian middle class does not have 100 rupees in the bank. So you don't keep money in the bank. You keep it as gold. You don't lose against inflation. And if you have an emergency, you can always go back to the bank and place it. Second and final point which I want to talk. Everybody thought that government bonds was a safe haven. Especially American bonds were a safe haven. There have been 3 bankruptcies of banks in America right now. The Federal Reserve has backstopped all of them and said all their deposits will be returned. All these banks went bust because they had invested in government bonds when the rate was at long-term government bonds when the rate was 1%. Nobody expected inflation to be, none of these guys expected inflation to go up so fast as it has done. And when the interest rates went from 0 to 5, the bonds that were held as safe haven by the banks also lost in value. In some cases, some of the US Treasury bonds lost 50% value when the markets moved from 0 to 5. A 50% drop in value cannot be a safe haven. So the concept that the US Treasury bond was a safe haven has taken a severe beating, especially with the 3 banks that have collapsed. But for a middle third world country, a developing country, which currency keeps on depreciating every day, take the case of Pakistan or Sri Lanka, the US dollar definitely is a preferred safe haven to a Pakistani rupee or a Sri Lankan rupee. So the concept of safe haven differs from where to where you are. If you are in India, gold is a safe haven which has almost doubled in price in the last 5 years and has returned 15% in the last 1 year. However, if you are in America, then gold has corrected and has not yet reached its all-time high. So what is a safe haven also depends where you are. आपने इस पॉडकास्ट को सुना, इसके लिए मैं आपका आभारी हूँ. आपको इस वीडियो को लाइक कीजिए, वीडियो को शेयर कीजिए और इस चैनल को सब्सक्राइब कीजिए. बेल नोटिफिकेशन दबाएं और हो सके तो इस वीडियो को अपने दोस्त और रिश्तेदार के पास भेजें और उनको देखने की आग्रह करें. धन्यवाद. नमस्कार. जय हिंद. नमस्कार. फिर पैसा बोलता है में आपका स्वागत है. मैं 24 नवंबर शुक्रवार कुवैत में हूँगा. 3:30 बजे से लेके 6:30 बजे तक इवेंट होगा. इवेंट होने का एड्रेस है याकूत बैंक्वे हॉल, मिलेनियम होटल कन्वेंशन सेंटर, रिंग रोड, अबू तार अल गफारी स्ट्रीट, कुवैत. जो मुझे उधर मिलना चाहे वो नीचे दिए गए व्हाट्सएप नंबर या ईमेल से हमें संपर्क करें. मेरा टीम आपसे कांटेक्ट करेगी. नमस्कार. धन्यवाद. जय हिंद.